You saw the readout here of, I guess, what we learned during the last Fed meeting, which was, I guess the Fed is pretty much doing what they've told us they were going to do this entire time.
Yes, exactly. And I think the only thing that remains in question now is how long is higher for longer, right? Mm-hmm. If you look at the Bloomberg WIRP, right, we have a 31% chance of a cut in March, 75% chance of a cut in May. March would really be the same as higher for same, not higher for longer.
Yeah.
So it really depends on how these financial conditions evolve, how inflation data evolves, and how jobs data evolves.
Well, let's take two of those pieces of data, the jobs data and the inflation data, which seem to be most important. Based on your own reading of that data, is there a case that the rate hiking cycle is over?
Oh, for sure.
Yeah.
Our base case is not only is the cycle over, but that the first cut will come in May.
May.
In May.
Okay.
Now, personally, I think, and this is not the House view, that there is an increasing chance that it could come in March. And the question is, what would that mean, right? There's an argument out there that if they cut in March, it would be because things have gotten really bad. I think there's a scenario where in order to stick the soft landing, they're gonna have to start getting to neutral. They're in restrictive. They're going to have to start getting in neutral. They want to do that in a measured fashion, right? 25 basis points a pop. They do not want to be caught behind having to do 50 or 75 basis points.
So this is cuts. Less about hitting the gas again and more just taking the foot off the brake and trying to coast to
exactly.
Someone. I got you.
And ideally, you know, the economy will stay strong enough that they could wait until May, because I think that will really solidify the lower pressure on inflation. But if we look at the month-over-month data, and we do, say, a 3-month annualized rate of the core, we're at 2.6, right? So we're getting into the territory, and how that translates into a PCE that could be acceptable to the Fed.